Everyone is waiting for the crash. The moment the dollar dies, the day America loses everything, the headline that changes the world overnight. It's not coming. Not because the dollar is strong, not because America has solved its problems, but because that's not how reserve currencies end. They don't crash, they erode. And erosion is far more dangerous than collapse because most people never notice it happening. Here is why this matters to you directly. If the dollar collapses overnight, you see it, you respond, you adapt. But if your purchasing power quietly shrinks by 3% a year for 20 years, if your government borrows more than it earns for 3 decades, while interest payments quietly consume the budget, if the options available to ordinary Americans quietly narrow without any single moment you can point to, that's not a collapse. That's what actually happened to Britain. And Britain never saw it coming because they were also waiting for the crash. Let's be precise about what reserve currency status actually gives you. It's not a trophy. It's not a title. It's a set of very specific financial privileges that make governing easier and living cheaper. Privilege 1, cheap borrowing. When the world needs dollars to trade, countries accumulate dollar reserves. Those reserves go into U.S. Treasury bonds, which means America can borrow money at lower interest rates than any other country. For decades, this let America run deficits that would have destroyed any other economy. Privilege 2, the inflation export. When America prints dollars, those dollars flow into global trade. The inflation gets distributed worldwide, not concentrated at home. Privilege 3, sanctions power. Because global trade runs on dollars, America can cut any country off from the global financial system simply by blocking dollar access. No other country has this weapon. These 3 privileges are worth trillions of dollars annually. They are what reserve currency status actually means in practice. And they are all currently being eroded slowly, quietly, without a single crash moment. The erosion started before most people noticed. In 2001, the dollar accounted for roughly 72% of global foreign exchange reserves. Today, that number is approximately 57%. That's a 15 percentage point drop over 25 years, not a collapse, an erosion. In 2022, the United States froze Russia's dollar reserves after Ukraine, $300 billion in sovereign assets frozen. That decision was legally defensible, geopolitically rational, and financially catastrophic for the long-term credibility of the dollar. Because every central bank in the world had the same thought simultaneously. If America can freeze Russia's reserves, it can freeze ours. Central banks don't make emotional decisions. They make mathematical ones. After 2022, gold purchases by central banks hit levels not seen since 1967. Not because gold is fashionable, because gold cannot be frozen. The erosion accelerated. Now look at the 3 privileges and what's happening to each. Cheap borrowing. Gone. America's debt has crossed $37 trillion. Annual interest payments now exceed the entire defense budget. Foreign demand for Treasury bonds is at its lowest level since 2012. To attract buyers, America must now offer higher interest rates than before. The cheap borrowing privilege is becoming expensive borrowing. Inflation export weakening. As the dollar's share of global trade shrinks, more inflation stays at home. The Fed's difficulty controlling inflation since 2021 is partly structural, not just a policy failure, a consequence of reduced dollar dominance. Sanctions power degrading. Every country sanctioned by America becomes a testing ground for alternatives. Russia survived, Iran survived. Both are now trading outside the dollar system. CIPS processed 1.22 trillion yuan in a single day in March 2026. The sanctions weapon still works, but fewer countries fear it absolutely. And a weapon everyone is building defenses against is a weapon losing its power. Here is what the erosion looks like from inside an ordinary American life. It doesn't look like collapse. It looks like prices rising faster than wages for a decade. It looks like healthcare costs consuming an ever larger share of family income. It looks like a college degree costing 4 times what it cost 30 years ago. It looks like the same government services requiring more tax revenue to deliver. It looks like infrastructure that was built in the 1950s and 1960s slowly deteriorating because the budget priority is interest payments on existing debt. These are not random failures. They are the domestic consequences of a government that has been able to borrow cheaply for so long that it forgot how to prioritize. Britain's workers felt this in the 1950s. Wages stagnant, services quietly declining. The sense that things were harder than they used to be, without being able to explain exactly why. They weren't living through a collapse. They were living through an erosion. The difference is that erosion takes 30 years to become undeniable. The question people always ask at this point is, what's the alternative? And that question contains the answer to why the erosion is so slow. There is no clean alternative. The yuan is not fully convertible. China's capital controls make it an unreliable reserve asset. The euro has its own structural problems. The eurozone crisis proved that a currency without a unified fiscal authority is structurally fragile. Gold cannot move fast enough to settle modern trade volumes. There is no Bitcoin reserve currency, no digital replacement waiting in the wings. So the dollar remains dominant not because it is strong, but because the alternatives are weaker. This is exactly how sterling maintained its reserve currency status for 20 years after Britain had clearly lost the economic foundation to justify it. The world kept using sterling not because they trusted Britain, but because there was nothing else ready. And during those 20 years, Britain's options kept narrowing. Interest rates stayed high to protect a currency status the economy could no longer support. Domestic investment suffered. Manufacturing declined. The gap between what Britain was and what it projected grew wider every year until it couldn't. So what actually happens? Not a crash. A slow transfer of options from the government to its creditors. Interest payments consume more of the budget. Less remains for defense, infrastructure, research. The military footprint gets harder to sustain. Alliances become more transactional. Influence requires more spending to maintain. The currency weakens gradually. Import prices rise. The goods Americans buy from the rest of the world cost more in real terms every year. Living standards don't collapse, they compress. The top tier maintains, the middle tier shrinks, the bottom tier falls further. This is not a prediction. It is the documented experience of every country that has gone through this transition before. Britain 1945 to 1976. 30 years of compression, not collapse. compression. The difference matters because compression doesn't produce the kind of dramatic political response that collapse would. It produces slow frustration, declining institutional trust, and the gradual sense that the system no longer works for ordinary people. Britain had 30 years of that, and now the country that replaced Britain is entering the same 30 years. The dollar won't collapse, but the America on the other side of this transition will be a different country than the one that built the system. The question is not whether this happens. The question is whether anyone in Washington is willing to say it out loud. History suggests they won't, until they have to. This has been the final video in the How Empires Fall series. If you want to understand what comes next, which empire is positioned to fill the space, and why it won't look like anything we have seen before, the full playlist is in the description. Every video, one pattern, 500 years of history explaining today's headlines.